what you're viewing here, in my opinion, this is the Great Reset. The 300 billion of Treasury reserves were basically absconded with. Nation after nation is looking at that and they're saying, well, if they can do it to Russia, then they can do it to anyone. They want to make sure that their monetary reserves don't get canceled. And, you know, gold is the obvious choice, because if you hold it in your possession, it can't be canceled. It cannot.
You're watching Silver News Daily. Subscribe for more.
Silver investors, listen up, because what you're about to hear could change everything. Bill Holter isn't just issuing a warning. He's sounding the alarm on a global financial meltdown that could send silver prices into the stratosphere. For decades, the US dollar has reigned supreme, backing global trade, controlling markets, and giving the United States unmatched economic power. But cracks are forming. Nations are fleeing the dollar, economic alliances are shifting, and the financial system as we know it is on borrowed time. Holter believes the moment of reckoning is closer than anyone realizes, and when the dollar finally crumbles, chaos will erupt in financial markets worldwide. But here's where it gets interesting. Silver, the historically overlooked underdog of the precious metals world, is positioned for a move so violent, so rapid, that most investors will miss their chance before they even realize what's happening. Think back to 1980, silver exploded to nearly $50 an ounce. Then again, in 2011, the same thing happened. But what's coming next? Holter suggests those past surges were nothing compared to what's on the horizon. If his predictions are right, silver could shatter expectations, reaching levels no one ever thought possible. And if you think central banks and governments will just sit back and let this happen, you're mistaken. The battle for control over the monetary system is already underway, and as the dollar weakens, the rush into hard assets like silver will accelerate. So, what's really happening behind the scenes? Why are countries like China, Russia, and even Saudi Arabia distancing themselves from the dollar? And most importantly, how does this lead to silver's historic rise? Stay with me, because once you see the full picture, you'll understand why Bill Holter is more convinced than ever that a financial reset is coming, and silver is the key to surviving it.
Yeah, there's been a huge influx of metal moving from London to COMEX. You can look at the amount of contracts standing for delivery for February for gold. Those are definitely outsized. Even January was outsized. January was if you want to call it a non-delivery month, it was not one of the major months, yet there was a huge amount of gold. I think it was close to 3 million ounces, 2.9 million ounces in January. So one school of thought is this gold is moving from London to New York to meet anticipated deliveries. Same thing with silver. Silver's the following month out. It's March. So if we get through January, then if we get through February, then we've got March for silver. So in the next 45 to 60 days are going to be nail biters for the shorts, just simply because if they don't have enough metal, then you get a failure to deliver, and a failure to deliver, it really blows the exchange up. Because in the words of my late partner, Jim Sinclair, what's the value of a contract they cannot perform? If they can't deliver, then what's it worth? It's worth zero. That's one school of thought on the metal moving from London to COMEX. Another school of thought, if you look all over the world, nations have been repatriating their gold over the last, really over the last 2 years. Nations have repatriated their gold out of New York, out of London, and brought that gold home to their own territory. And I think that is a function of what was done to Russia back in October, November of 2023, when the 300 billion of Treasury reserves were basically absconded with. nation after nation is looking at that and they're saying, well, if they can do it to Russia, then they could do it to anyone. And I think that's a function of nations not wanting to be, if you want to call it, canceled. That they want to make sure that their monetary reserves don't get canceled. And, gold is the obvious choice because if you hold it in your possession, it can't be canceled. It cannot bankrupt. It can never become a black hole on a central bank's balance sheet. It's always going to have value. And we can get into this later in the discussion. But what you're viewing here, in my opinion, this is the Great Reset. Now, you call it monetary reset. I'm going to call it the everything reset, and we can talk about that in a little bit.
Enter Brics, the economic powerhouse that is quietly but systematically dismantling the dollar's global supremacy. Brazil, Russia, India, China, and South Africa, once considered a loosely connected group of emerging economies, are now at the forefront of an economic revolution. And the West is starting to panic. For years, BRICS nations have expressed their frustration with the dollar-dominated financial system, one that forces them to conduct trade in U.S. currency, making them vulnerable to sanctions, inflation, and reckless Federal Reserve policies. But now they're taking decisive action. BRICS countries are ramping up bilateral trade in their own currencies, slashing their reliance on the dollar, and, most critically, working on a new global reserve currency that could rival or even replace the US dollar. This isn't just speculation. It's already happening. Russia and China have completely abandoned the dollar in their energy trade, opting instead for the Chinese yuan. India is paying for Russian oil in rupees. Brazil and Argentina have announced plans to settle trade outside of the US financial system. And at the 2023 BRICS summit, these nations openly declared their goal: a multipolar financial system, one where the dollar is just another currency, not the global standard. But here's where it gets even more alarming. The expansion of BRICS is accelerating. Countries like Saudi Arabia, Iran, Turkey, and even European nations are expressing interest in joining this growing alliance. If BRICS continues on this trajectory, the economic influence of the West could erode at a pace no one thought possible. And when the world no longer needs the dollar for trade, the trillions of dollars circulating globally will come flooding back to U.S. shores, sparking an inflationary crisis unlike anything America has ever seen. Now, what does this have to do with silver? Everything. Because as confidence in the dollar erodes, nations and investors alike will seek alternatives: hard, tangible assets that can't be inflated away or manipulated by central banks. Gold has already been the go-to asset for central banks, but silver? Silver is the wild card. It's historically undervalued, has massive industrial demand, and when fiat currencies collapse, it outperforms almost everything. And there's one critical pillar of dollar supremacy that's been holding the system together for the last 50 years. But that pillar is now crumbling, and when it falls, the floodgates will open.
If you view this entire thing, first off, going back to Germany was the first one really to repatriate anything of size. They asked for 300 tons of gold. They were told, oh, it's going to take at least 2 to 3 years to do because of the logistics, blah, blah, blah. It was all bullshit. If they could not do 300 tons in 2 or 3 years, then how can they do 400 tons now in 10 days, 2 weeks time? So that clearly shows that they were lying back then. It's my guess that certainly there's some credence to these COMEX contracts have to be delivered, because if they're not delivered on, then they go to zero and the confidence in futures will collapse. Looking at it from the standpoint of a global reset, this could just be onshoring gold to the United States, because the United States understands there's a reset. And the old saying, he who has the gold makes the rules, you want as much gold on hand as you possibly can. Now, this 400 plus tons is chump change compared to what has been accumulated by central banks over the last 3 to 5 years, and really chump change if you compare it to what China has sourced over the last 10 to 15 years. It was really back in, I think it was 2011 or 12, when China began leaking some of their treasuries and unloading gold. I mean, if I remember 6, 7 years ago saying, and I mean, it was easily done on the back of a napkin, I could show you by 2017, 18, that China already had 25,000 metric tons. So that number, in my estimation, is probably 35,000 metric tons compared to the supposed 8,300 tons that the U.S. has, which I don't believe they have. So our gold reserves have been dwarfed by China. Now, getting into the reset aspect of it, I think the last 3 weeks, and 3 weeks ago was the inauguration for Trump, the last 3 weeks, if you cannot see that this is a complete reset upheaval of the status quo, business as usual, then you're not paying attention, because everything is changing. I mean, just look at the executive orders, and I'm not happy with all the executive orders, and we can get into that if you want or not. But the executive orders are upending the status quo. The way America had been run for the previous 50 years is already changed, and it's going to continue to change. So you've got social issues, you've got financial issues, you have monetary issues. The entire system is in the process of resetting, and I would think that within, 90 to 180 days, you're going to look back to where we were just 3 weeks ago, under the previous administration and the previous, if you want to call it, world order. You're not going to recognize in 3 to 6 months where we are compared to.
For nearly 5 decades, the petrodollar system has been the backbone of U.S. economic dominance. It's the silent force that has kept the dollar in demand, ensuring that every nation on Earth needed to hold vast reserves of U.S. currency just to buy oil. But now, that system is unraveling before our eyes, and the consequences could be nothing short of catastrophic. To understand the gravity of this shift, we need to go back to 1973. In a deal brokered by the U.S. government, Saudi Arabia and other OPEC nations agreed to sell their oil exclusively in U.S. dollars. In return, America provided military protection and deep financial incentives. This created a massive artificial demand for dollars worldwide. If you wanted oil, you needed U.S. currency. Central banks across the globe stockpiled trillions in treasury bonds just to facilitate trade, and the U.S. economy reaped the benefits. It allowed America to print money without consequence, run endless deficits, and maintain a standard of living far beyond what its actual productivity justified. But that era is coming to an end. In early 2023, Saudi Arabia dropped a bombshell, announcing that they were open to accepting other currencies for oil payments. It was a quiet statement, but its implications were deafening. Just months later, Saudi and Chinese officials met to discuss yuan-based oil transactions, signaling the beginning of the end for the petrodollar. Then came India, buying oil from Russia in rupees. Even the United Arab Emirates, a longtime U.S. ally, has started settling trade in Chinese yuan. One by one, the pillars propping up the dollar are being kicked out from under it. If Saudi Arabia fully abandons the petrodollar, and all signs suggest they will, the demand for U.S. dollars will plummet. Countries holding trillions in reserves will no longer need them, leading to a tidal wave of dollars flooding back into the U.S. economy. And what happens when too much currency chases too few goods? Hyperinflation, collapsing purchasing power, an economic crisis that could make the 1970s stagflation look like a minor bump in the road. And in a world where the dollar is no longer king, the rush to hard assets will be unlike anything we've seen before. Gold will soar, but silver, already in tight supply, could explode. Every previous monetary crisis has sent silver rocketing past expectations, and this time the setup is even more extreme. But the fallout from a collapsing petrodollar isn't just financial, it's geopolitical. When a superpower loses control of its currency, it loses control, period. And history has shown that economic collapse is almost always followed by political chaos and global instability. And that's exactly where we're headed. Where?
Well, one obvious thing would be to remonetize the gold that we hold. Uh, it's it's on the books at what, $42 an ounce. So if they were to remonetize that, or revalue that to the current price of 2,900 plus per ounce, you're looking at, I don't know, I think the number somewhere in the neighborhood of 900 billion, close to $1 trillion. So the gold that we hold actually has value of, use the figure of $1 trillion versus, a paltry figure well under $100 billion on the balance sheet. So that would free up, if you wanted to call it collateral, that would free up collateral that they could either borrow against or spend. And that's assuming that they use the current number of $2,900 an ounce. Now, I had done the math, I don't know, 4 or 5 years ago, that in order to cover the debt, gold would have to be $125,000 an ounce, and it's obviously more than that now. But what that, if we had a reset and you got to, really high numbers like $125,000, $150,000, that would allow the Treasury to basically cover the debt with gold holdings. And that I don't think would be frowned upon by foreign nations, because they've been picking up gold left and right for the last few years, and they have gold on their balance sheets. So it would reliquefy central bank balance sheets across the world. So it's that's the obvious aspect of it. Revaluing assets. What about BLM land? Other assets that the U.S. holds. Could they sell those off? I'm not privy to everything that they're considering monetizing, but you're talking about national assets now that they could be monetized. I lean toward it's a gold solution. It's not necessarily a land solution, and I say this because Scott Bessent, the Treasury Secretary, one of his biggest holdings is physical gold. And you have to look back, Trump's family was a gold family. His grandfather or great-grandfather was actually investing in mines. So that family understands gold, and I think they would understand what remonetizing gold would mean. And I think Trump also does understand that the Federal Reserve is, it's neither federal, they don't have a reserve, and the way it was done originally and the way it still is now, basically it's an illegal operation. It's private bankers. So it wouldn't surprise me to see, when all is said and done, where the central banking system itself collapses and you start seeing nations issuing non-interest-bearing currency.
The collapse of the petrodollar won't just be an economic event. It will be a full-blown financial earthquake, sending shockwaves through every market on the planet. When the dollar loses its grip on global trade, the consequences will be swift and brutal. Skyrocketing inflation, a crumbling stock market, and a total loss of confidence in the U.S. financial system. The world has been operating on a system built on debt and artificial money creation. And when that system breaks, there will be no stopping the chaos that follows. Think about it. What happens when the U.S. can no longer export its inflation to the rest of the world? For decades, foreign nations have been forced to hold U.S. dollars to trade, absorbing the Federal Reserve's endless money printing. But once that demand vanishes, those trillions of offshore dollars come rushing home. The sheer volume of currency flooding back into the domestic economy will obliterate its purchasing power, sending prices soaring on everything from food to housing to energy. Hyperinflation won't just be a distant scenario, it will be an everyday reality. And what about the US stock market? Wall Street has been living in a fantasy land, propped up by cheap money, artificially low interest rates, and the illusion of perpetual growth. But when the world no longer needs US bonds, interest rates will skyrocket, crushing corporate debt markets and triggering a market meltdown worse than 2008. Every asset class tied to the dollar's supremacy, stocks, bonds, even real estate, will suffer massive corrections. Pension funds will be wiped out, savings will be obliterated, the financial pain will be felt by every single American. But here's the most dangerous part. Governments do not go down without a fight. When their financial system is under threat, they don't just let it collapse. They respond. And history has shown us exactly how they do it. Capital controls, banking restrictions, asset seizures. The closer we get to a full-scale monetary crisis, the more aggressive governments will become in trying to maintain control. We've seen it before in Venezuela, Argentina, and Zimbabwe. Now the question is, how long before it happens in the United States? When financial chaos erupts, people instinctively rush to the one thing that has preserved wealth for centuries: hard assets. Gold has always been the go-to safe haven, but silver? Silver is the true wealth protector for the masses. It's affordable, tangible, and historically explodes when fiat currencies collapse. And this time, the silver supply crisis is more severe than ever. Because while all of this unfolds, something even bigger is happening in the silver market: a supply and demand imbalance that could send prices parabolic.
That's like an all-encompassing question. Uh, I think if you look at trade is it's a very finely tuned machine, if you will. Uh, you get any type of shocks or big changes to trade, and what it does, it'll slow trade down. And I expect to see uh, big disruptions in trade. You've got the tariff issues, and you've got the issue of how is the world gonna settle trade? I mean, when this reset goes through, how is the trade gonna be settled? Is it gonna be settled in dollars? Is it gonna be settled in gold equivalent fiat currencies? And then you've got, the pie gets sliced in half. You've got the Brics currencies and you've got the Western world. So, are the Brics going to be willing to accept Western fiat for trade? I mean, I don't know the answer to this. I do know that the Brics will trade amongst themselves, and trade will be pretty smooth because they're all joining a new common currency. I guess the best thing to say at this point is there's nothing in concrete at this point, but we see a lot of signs that the world that you knew is not the world that you're going to know.
Silver has always been the underdog, the overlooked asset that lags behind gold, until the moment it doesn't. When fiat currencies collapse, when inflation spirals out of control, and when financial systems begin to break, silver doesn't just rise, it explodes. And right now, the setup for silver's next historic breakout is more extreme than anything we've seen before. At the heart of this setup is a growing supply and demand imbalance that Wall Street refuses to acknowledge. Silver isn't just a monetary metal, it's an industrial powerhouse. It's critical for solar panels, electric vehicles, 5G networks, and medical technology. The world is racing toward a future powered by green energy, and silver is an irreplaceable part of that equation. The problem? There's simply not enough of it. Silver supply has been in a deficit for 4 consecutive years, with demand far outstripping new mining production. Global silver stockpiles are being drained at an alarming rate, and unlike gold, where almost all the metal ever mined still exists, silver gets consumed. It gets used in industrial applications, and much of it is never recovered. That means every year, less and less physical silver is available for investors. Now, add in monetary chaos. As trust in fiat currencies erodes, the rush into precious metals will intensify. But while gold remains the first choice for central banks and institutions, silver is where retail investors turn. And historically, when silver demand spikes, prices move with a ferocity that catches everyone off guard. We saw it in 1980, when silver rocketed from under $6 to nearly $50 in months. We saw it in 2011, when it surged from $9 to almost $50 again. Each time, silver's gains far outpaced gold's. And here's the key. Unlike past bull runs this time, the supply situation is far more dire. The physical silver market is already under pressure, and when demand finally overwhelms available supply, the price suppression that has kept silver artificially cheap will break. The result? A silver squeeze unlike anything in history. But there's another force lurking beneath the surface, one that has manipulated silver prices for years. A force that has been artificially suppressing the market, keeping silver undervalued and out of reach for most investors. And when that manipulation ends, the floodgates will open.
Well, yeah, that's what I was going to get to is if you hold commercial real estate and you see this going on, you got to be crapping your pants right now because it's already a busted market. I mean, the average valuation is probably 50 cents or less of what it was back in 2017, 18. And you're seeing building after building being turned over to lenders because the original owners, borrowers, they can't refinance, and they're not able to make a go of it as a going concern. So the valuations have already crashed, and then on top of that, you're going to get the government offering even much more office space, commercial buildings. So I think the timing is disastrous for commercial real estate. And as an offshoot, it's really bad for the banking system because somebody lent those funds out originally. And those funds now, all the equity's been wiped out and it's chewing into debt. I mean, you've got some bond tranches that aren't even worth 40, 50 cents on the dollar. They're worth less. I mean, that's all the property would fetch now.
For decades, the silver market has been a battlefield, one where powerful institutions have waged a relentless war to suppress prices, keeping silver artificially cheap and out of reach for the average investor. But like any manipulation, it can only last for so long, and now the cracks in this system are beginning to show. The primary weapon in this manipulation? Paper silver, futures contracts, derivatives, and unbacked promises of silver that exist only in digital form. Major banks and financial institutions have built an entire ecosystem around shorting silver, using leverage to flood the market with paper contracts that have no connection to real physical metal. This allows them to control price movements, keeping silver from making the kind of dramatic moves that should naturally occur in a supply-constrained market. But what happens when confidence in that system breaks? History has already given us a preview. In early 2021, retail investors attempted to trigger a silver short squeeze, exposing just how fragile the market truly is. Within days, silver spiked from $25 to nearly $30 an ounce, and physical bullion dealers were completely wiped out of inventory. But the real revelation came when the COMEX, the primary exchange for silver trading, was pushed to the brink. As demand for physical delivery surged, it became clear that much of the silver traded in the market simply doesn't exist. The key to this entire manipulation scheme is confidence. As long as investors believe in paper silver, as long as they accept digital claims instead of real metal, the system holds. But the moment confidence cracks, the entire game falls apart. When people demand real, physical silver instead of paper contracts, the suppression breaks, and silver is free to move toward its true value. And that's exactly where we're headed. Nations are dumping the dollar. Inflation is spiraling out of control. The supply of physical silver is drying up, and investors are waking up to the reality that paper silver is a ticking time bomb. The moment a true short squeeze occurs, one where the demand for real silver overwhelms the manipulated paper market, prices won't just rise. They'll launch. But there's one final element to this story, one last piece that could take silver's explosion from historic to absolutely mind-blowing. Because when silver moves, it doesn't just affect bullion investors. It sends silver mining stocks into overdrive.
Yeah, well, you're absolutely right. The volume of, and I'm talking about single family, about housing at this point. The housing market, the volume has collapsed. Volume of deals going to close are at 50% or slightly less than 50% of what it was a year and a half, 2 years ago. So the volume has collapsed. And I've spoken on this, I've written on this, I've posted articles on this on my website. Price always follows volume. If you're at normal valuations as opposed to the astronomical valuations that we're at now, when volume collapses, the price follows. And that's you're seeing that. I look at many parts of Florida. You're in Florida, right, Dunnigan? Yeah, I mean, look at Florida. Florida's has quite a few sectors where people can't sell, and people are walking away either because of taxes or insurance, or they've lost a job. I mean, you've seen it. I've seen it. We've talked about this. The precious metals area. I've never in my entire career seen so much selling, and now the selling has come in size. And the bids compared to spot are poor. The bids are actually below spot, but yet people are still selling. And that tells me they're selling because in many cases they need to. They need to sell to raise cash to just to continue to go forward. So what has hit the precious metal sector is hitting the housing market. I think the best area to look in the housing market are starter homes. If you look at the average price of starter homes nationwide, the average person cannot afford to buy those. And if you gut the foundation of a market, any market, you basically gut that market. Now, are they going to feel it immediately in $3 million, $5 million houses? No, but in the $250,000, $350,000 starter home range, you have people with these higher interest rates and an economy that has done nowhere near as well as what they have told us, and unemployment much greater than what they've told us. That reality is coming through the final numbers of closings on houses. And again, just look at the starter home market. There, the average person, the average buyer cannot afford a starter home. So, one of three things has to happen. Either interest rates have to come down drastically, people have to start making more money, or simply the prices have to come down. And history shows us that after bubbles form and after they burst, the prices collapse. And I think that's, we're right there. The pin is hitting the balloon right now.
When silver explodes, it doesn't just send bullion prices soaring. It ignites a chain reaction in silver mining stocks, triggering gains that can dwarf even the most aggressive silver price moves. In every major silver bull run in history, the miners have been the true hidden jackpot, multiplying returns by factors that leave traditional investments in the dust. And this time, with supply tighter than ever and demand accelerating at an unprecedented rate, the setup for silver mining stocks is unlike anything we've seen before. Let's look at history. In the 1970s silver bull run, while physical silver climbed over 800%, silver mining stocks saw gains of 1,000% or more. Fast forward to 2011, and we saw the same phenomenon. While silver itself surged from $9 to nearly $50, top-tier mining companies delivered 500%, 700%, even 1,000%. 1,000% returns in a fraction of that time. Why? Because mining stocks are a leveraged play on silver itself. When silver prices rise, the profit margins for miners don't just increase, they explode. Now consider today's situation. Unlike previous bull runs, silver supply is already in a deep structural deficit. Mine production has stagnated, exploration has slowed, and the silver industry is facing declining ore grades, meaning it's getting harder and more expensive to pull new silver out of the ground. At the same time, industrial demand is at record highs, with solar panels, electric vehicles, and high-tech industries consuming more silver than ever before. This means that when the silver price finally breaks free from manipulation, the impact on mining stocks could be far more extreme than in previous cycles. But here's the kicker. Many of the top silver mining stocks are still trading at rock-bottom valuations. The market has been asleep on silver for years, ignoring the growing supply crisis and the monetary storm brewing on the horizon. This has created a rare window of opportunity, one where mining stocks are still cheap, just before what could be the most explosive silver rally in history. And this leads us to the final piece of the puzzle, the timing. Because everything we've discussed so far isn't just theoretical. The dollar's collapse, the unraveling of the petrodollar, the end of silver price suppression, all of it is accelerating right now. And when the system breaks, the opportunity to act will vanish in an instant.
Yeah, I guess my thought on that is we've had inflation all along. Go back to from 1982 when inflation supposedly peaked. We've had inflation of asset values, of asset pricing. We've had, the stock market go up. We've had real estate go up. We've had asset prices explode in valuation levels, if you will. That's inflation. That was caused by the creation of money supply and the creation of credit. So that was inflation, but the average person views that as good inflation because, my hamburgers still only cost $2 or $3, but, my $250,000 house is now $1 million. My portfolio that I put, $100,000 in, that's $1 million. It's all good stuff, and you'll hear them start chanting USA, USA. Where we are now is we've reached a debt saturation level. So the inflation that they can push into asset prices it's stopped. It's stopped, and you're starting to see that roll over. So that inflation coming down is obviously not going to be good as thought of by the average person. It's we're also, and since COVID unmasked the supply chains, since COVID, and obviously the money that was put into the system during COVID, we've had inflation of stuff we need. And this goes back to what I talked about for at least 10 years, that when the final chapters are written, you're going to watch deflation of the things we have and inflation of the things we need. It's a double whammy. Your cost to live goes up, but your ability to pay for that lifestyle with your assets shrinks. And that's where we are now. And it's I guess the best way to explain it is it's the end of a Ponzi scheme, because the amount of debt outstanding, or the amount of debt that can and needs to be issued. When I say needs to, debt needs to be issued at higher and higher levels, exponentially higher levels, in order to feed the Ponzi. And what you're having here is you're watching the new credit, the new funds come into the Ponzi shrink. And at the same time, which I think is interesting, I have not heard really hardly anybody talk about this, but all of this government waste that they're uncovering, billions, hundreds of billions, over, $1 trillion, that's no longer going to be coming into the system. So that money that had continually flowed into the system, now all of a sudden those spigots are getting shut off. So I think what you're going to be looking at is asset values and the real economy just going into full-on shrink mode.
Everything we've covered leads to this moment, the inevitable breaking point. The dollar's global dominance is fading, the petrodollar is unraveling, and nations are actively preparing for a world where the US currency is no longer king. The financial system, built on mountains of debt and artificially suppressed interest rates, is running out of time. And when the moment of reckoning arrives, silver will no longer be an overlooked asset. It will be the lifeboat for those who saw the storm coming. Bill Holter's warning isn't just about silver prices rising. It's about the complete transformation of the global financial system, a shift so massive that those who fail to prepare will be left scrambling. When trust in fiat currencies collapses, when central banks lose control, when trillions of dollars flood back into the US economy, triggering hyperinflation, the rush into hard assets will be unlike anything we've seen before. And silver, historically the most undervalued and manipulated metal, is positioned for a breakout so extreme that even $50 or $100 per ounce could seem conservative in hindsight. The paper silver markets can only suppress reality for so long. The physical shortage is real. The industrial demand is surging. The manipulation is on borrowed time. And once silver breaks free, history has shown it moves at lightning speed, leaving those who hesitated in the dust. So the question isn't whether silver will rise, it's whether you'll be positioned before it does. Because when the panic sets in, when the headlines finally acknowledge what's happening, it will already be too late. If you found this discussion insightful, make sure to stay informed, subscribe, and keep your eyes on the silver market. And remember, this is not financial advice. Always do your own research and consult a professional before making any financial decisions.
Well, it actually created a shit show, if you will. It was done by design. It was done by plan. If you're promoting young people to go to college, borrow money, go to college, and you're making it easy for them to go to college, then on the other hand, now we're finding out Doge is looking into this. All of this money was going to universities, being paid to professors, and what did they do? They brainwashed the kids. So in reality, the American public paid to get shit on by a bunch of, young 20-year-olds that went to college and know everything because their professors taught them this and everybody believes it and that's the way it is. I mean, we paid for that. I mean,